Oh man, Bitcoin is set to explode. In this video, I'm going to explain exactly why, and it's got to do with this chart and this chart. Two key charts which I'm going to break down and explain why they are so critical to Bitcoin not only exploding through 30,000 from the symmetrical triangle it's forming, but heading to much higher price targets. Yes, we are talking today about the liquidity in the market. I've spoken at length about Bitcoin being correlated to the liquidity in this market. In order to understand where we're at and why this is such a critical juncture, with many popular people shouting that Bitcoin is ready to run. Some are shouting million, some are shouting 200,000, 500,000, crazy numbers. But what have they all got in common? If we ignore the sensationalism, what have they identified and what is it that's going on in this market? And in order to understand, we know that throughout this period of time, we've been waiting for the Fed to pivot, right? We've been talking about the Fed and how they've been on this quantitative tightening mission, and we're waiting for them to pivot across to being our friends again, right? Printing money. When they print money, when monetary policy is loose, Bitcoin and risk assets do very well. Very basic understanding of risk on and risk off assets. We know that's how it plays out. But what you want to look at is all this time the Fed was printing, and around here in April of 2022, when they got to just shy of 9 trillion on their balance sheet, they thought, hang on a second, inflation's getting a little bit high, we need to do something called quantitative tightening. All that money we've just printed up, we need to hoover it back out. So they started hoovering it, and this is their quantitative tightening, that they were monthly allowing the assets to roll off their balance sheet. So the size of their balance sheet is reducing liquidity in the market. Bad for risk on stocks, which is why Bitcoin and many tech stocks on the Nasdaq have been struggling throughout this period. Fine. So what suddenly changed? Well, it's kind of staring you in the face, right? Look at this chart here. Look at the right-hand side, just above my head there. What has happened? We fell here to 8.3 trillion, suddenly had a massive spike here to 8.6. We covered that off at length. Crazy printing of 300 billion in 1 week due to the banking troubles. But the printing hasn't stopped. The printing the rate slow down in the week just gone, but they printed another net 94 billion in the last week. So to summarize, where that now puts us is, we have just undone 2/3 of the quantitative tightening. 2/3 of the entire quantitative tightening from April 2022 that I showed you has been undone in 2 weeks. And that's how quickly the money printer spins back on. That's how quickly the Fed will want to pump liquidity back into this market. And you can see that in different measures as well. This is the US dollar liquidity index. USD LIQ is the ticker symbol. Massive spike up here in March. Okay, you can see the M just there underneath. This is March, massive spike up. Another chart I like to look at in liquidity is this one. And what you notice here is, again, the same thing. What date is this? This is April 2022. So from April, we started tightening, and you can see we've been in a position where liquidity has been falling. Look at this crazy month here. Liquidity fell by 35% in the market. And we've pretty much been on this tightening period with a big retracement all the way down here. Now look at what we're seeing. These are monthly candles, by the way. This monthly candle of March has introduced 37% of liquidity back in the market. Liquidity is coming back, and that is a key driver for what's going on with Bitcoin. Okay, so now we need to talk about the Federal Reserve's lending. So if you look here, the Federal Reserve have started pumping liquidity back in the markets through different mechanisms. Now, some people are calling this stealth QE. In other words, they're trying to do QE through the back door without publicly saying, hey guys, look, we're doing QE. Either way, you can argue it as long as you want. Are the Feds your friend or are they not your friend? Are they doing things which is helping liquidity, or are they hoovering money out of the economy? Keep it very simple. And if you see them introducing initiatives which is helping banks, helping people, putting stimulus checks out there, helping banks get access to more credit, they are helping the economy, and that is positive for crypto. Here, at the start of March, you can see here, this was the discount window lending. When banks are in trouble, they go to the discount window and they're guaranteed at a certain rate they can take money from the Fed. That is the discount window. We're going to get into that a little bit shortly. And you slowly saw that increase and then a big spike up here, right? You saw this as a big spike up in them using this, which is showing that the banks were in stress. We know that. Silicon Valley Bank, Signature Bank, they were in a bunch of different problems here. We then had a bunch of loans, okay, to FDIC bridge banks. Again, another way of them getting money across from the FDIC. So what a lot of people are saying is, oh, look, they took less from the discount window this week, right? And they did. They took less, 42 billion less from the discount window this week. But what I want you to focus on is this bit here. This bit here is much bigger than what they took in the previous period, okay? Because they took an extra 43 billion from the BTFP program. That is the Bank Term Funding Program. They also took a massive chunk more here in the light blue of another 37 billion from the FDIC bridge banks. All of that to say that they are printing money. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on SKILLSHARE. For those who aren't familiar, SKILLSHARE is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days if you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. So if you look at this chart here, this is the expansion. This is the expansion of the usage of the discount window. If you look at this spike here, that is not a joke. That is not a mistake. That is what's happening right now. Banks are using this discount window to get extra liquidity on their balance sheets. And it's not normal behavior. Some people are arguing, oh, this is normal behavior. They do it at the end of a quarter to make their reports look good. Absolutely not. I've just pulled this chart here to show you from the, since the records have been available here, the only two previous spikes you had is, of course, during the pandemic, but before that, the 2008 financial crisis. And this spike here shows you more pain than that. Now, there have been some arguments that, oh, look, the Fed are trying to reduce the stigma around people using it. They want you to use it. But let's be real, guys. They're using this because they need access to liquidity. So we're seeing US dollar liquidity starting to increase, and the Fed focused on doing that. But here's the other side of the story. Bitcoin liquidity, and we've covered this off at length yesterday in my Coinbase SEC video, has been falling. If you look here now, Bitcoin is sitting at lower liquidity levels than after the FTX collapse, which is showing that their choke point is starting to work. Market makers are struggling to use any USD on-ramps because all these banks are now not supporting crypto, or they've collapsed, and that is now causing problems for people getting fiat currency on-ramped into crypto. So then that leaves us here, sat here in an environment where we've just been tightening from April 2022 all the way to now. In the last 2 weeks, we've unwound 2/3 of all that quantitative tightening. And what do you think that liquidity is going to do? Eventually, whether they have choke point or not, that liquidity will find its way into crypto. And we're sitting here on the 5-minute chart in a symmetrical triangle pattern. We want to see, does this break out to the top side? If it does, you're looking at working your way back towards 29,000 and trying to get towards 30,000. On the 4-hourly chart, we're still holding out nicely here from our break to the upside of our ascending broadening wedge. Remember, look, we had breakout. I called for the retest. We got a retest. We bounced nicely. Now we need to look for, can we start working our way towards our price target, which brings us up to 33K. Similarly, here on our daily chart, our head and shoulders pattern is looking very strong. Again, head and shoulders price target pattern brings you up to 35,000. Me personally, I'm expecting a lot of resistance, like I said, between 28, 29, all the way up to 31, 32. But if we can clear that level, guys, the explosion up towards the late 30s and early 40s could be powerful, because the next cluster of resistance sits at 38 to that 42 range, and that's what I'm looking for, that gap to fill quite quickly. And given what I've just described and how quickly the printing is happening in a stealth way, do not be surprised to see this moving quickly. For those trading this on the short term, I'm sitting here on the hourly. It's very, very important that we break to the upside here. And the reason for that is, if you're looking at this chart, we created a peak here and we failed to create that higher high here on the hourly chart. Very important that Bitcoin can go and create a higher high. Go touch 29,000 and then by all means come back down, because then you can create a higher low and start working your way in an upward direction. So that's going to be critical for crypto. If Bitcoin here is unable to break to the upside here and starts curling over, get ready for a proper retracement down to 26,000 is my first target, and then 25. Either way, a correction down to any of these levels will not nullify what I'm saying here. I seriously believe that the Fed has pivoted. We have seen a big change in their mindset. They've started introducing liquidity into this market, and bar a sudden tightening again, which they've not shown that they've been able to do. Look at this. Look at their attempt at tightening. Tiny little nibbles to the downside, but as soon as they want to print, boom, they're printing. Right? And we know that there's so much stealth quantitative easing going on that all liquidity indices are showing us a rise to the upside. That, coupled with the fact that there's low Bitcoin liquidity, means that even a relatively small amount of money in the crypto market right now, in the Bitcoin market right now, can send this price pumping in huge amounts. In other news, to give you guys an update on what's going on with Do Kwon, I did cover off the breaking news yesterday that he was arrested in Montenegro. He now faces criminal charges from US prosecutors. Very, very interesting update in events here. He has been, of course, on the Interpol wanted list. We know he already faced civil charges filed with the US SEC. He's being charged with conspiracy to defraud commodity frauds, securities fraud, wire fraud, and conspiracy to engage in market manipulation. They are looking to seek his extradition to the US. This could be huge, guys. If we look at some of the details, this was what I found interesting. The filing said that Kwon contacted representatives of a United States trading and investment firm for help in altering the market price of UST. Really look forward to him getting sent back to the US, getting a good investigation done here to find out exactly what's going on and find out the truth of how these guys are pulling the wool over the market's eyes and how they're manipulating, because that's what's going to make us stronger in the long run. Not just these guys disappearing off the face of the planet. We need to dive in and find out, how did they manipulate? How did they manipulate the market? Who were the other people that were the co-conspirators? Lock them up and let's keep things moving. So there you have it, guys. Really, really important time here in the markets as we're seeing that major U-turn from a tightening stance into liquidity actively being pumped into this market. Let me know, what are you guys doing in the market? Don't forget to smash up the likes. Don't forget to subscribe. As always, check out this video here and I'll see you in the next one.